Good morning, traders and investors. Hope everyone is having a good Thursday, October 2nd, 2025. Triple D and I got a good show for you here today. U.S. government remains closed. Does the stock market care? Does not seem to. We have SP 500 futures trading up about 0.2. A reminder, we were scheduled to get jobless claims data today. We are not going to be getting that because the U.S. government is closed. We were scheduled for Bureau of Labor Statistics monthly jobs data tomorrow. As far as we know, we will not get that data point tomorrow either. Let's see what's going on elsewhere in the market. We have the AI trade going again. Pharma stocks with a strong yesterday, reversing a bit here this morning. We had an exciting afternoon in STN last night talking about the huge, massive rocket buy and balance and the company announcing a filing for an offering shortly after. We're going to talk about Nebius deal with Microsoft for NVIDIA chips. The Occidental deal confirmed. Warren Buffett's Berkshire Hathaway will be buying the company's petrochemical unit. We are expecting Tesla auto sales around 9 a.m. here this morning. We'll find out if the market cares about Tesla auto sales anymore. Handful of ratings a little bit later in the show for you. Our guest at 8:35 a.m. Eastern Time, Tom Bowley from Earnings Beat's chief strategist. We'll see what he's got to say about the markets. Folks, let's get it going here on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, folks, let's take a quick look at the markets. As I noted, SP 500 futures trading up about 0.2%. That's about 16 points, 6,777. Let's call it. Take a quick look at the Qs here. Qs trading around the 6.0, just under the 607 level. Quick look at crude oil. Crude oil trading down about 0.5%, 61.43 per barrel. Real quick on gold trading around the 39.12.5 level, up about 0.4%. We'll do Bitcoin here real quick, and then we'll bring on the Triple D trader himself. Bitcoin trading up more than 1% here, just under the 120,000 level. I'm going to pull my charts back here, and we will bring on Triple D.
Going on, the Brentster. Me and you running the show here today.
Yeah, let's do it.
The Jewish holiday,
fun,
so
right?
Joel is off today, but he will be back with us tomorrow. But me and the Brentster, don't worry. We've got this. Brent knows the news. I know the stocks here. Let's go. So
Let's go.
Government shutdown. Everybody worried yesterday morning on the government shutdown. We sell off 50 handles overnight, and what do? What do they always do? What do they always do? They buy the dip. And where do they go? The AI trade. We kind of talked about there's going to be a turnaround here. It's going to be in those AI stocks, and it's exactly what occurred yesterday. Lots of AI stocks ripping higher here, continuing the rip overnight as well. It's AI Thursday, I guess you could call it, because we've got Applied Materials. We've got AMD and NVIDIA making new all-time highs for NVIDIA. We've got ARC way up. We've got Tesla sales coming. They love tech. Apple ripping up and close to new all-time highs as well. Everything is all butterflies, rainbows. Just everything is just awesome. You're long. You're loving life. Blindly buying the dip continues to print money. Just blindly saying, of course they're going to buy the dip on the government shutdown. What the hell do they care? There was a few stocks that were weaker. Some of your value names were weaker. Drugs. We got to stop there for a second, too, because yesterday I tweeted out this market is on drugs. And if you want to see a real catalyst for the turnaround early before the AI trade really picked it up, it was the drug stocks. This 2-day move in Pfizer and Merck and Lilly and Amgen and the XLV altogether is unbelievable. These are huge moves. Pfizer was up like 15% in 2 days. Merck up, man, Merck 2 days ago was $78. It hit 90, 92 last night, 91.75.
Wow.
These
Oh my
moves
gosh.
are absolutely nothing short of incredible here. Now, yesterday we talked to Jugs a little bit. And I was like, I wouldn't fade them. And I'm like, these things are so undervalued that if they start getting a little bit of love here, you can see this rally. You can see it continuing to go. That's exactly what occurred. Now, I think you got to get a dip because, buying Pfizer, Merck up 10, 12, 15% in a couple of days probably isn't a way to make money in the long run. But I tell you, some people are taking notes and they're looking at these things. Decent dividends. Pfizer's dividends 6.34%. Bristol Myers still 5.2%, and that's after these 13% moves. So I think drugs are back in favor here. I think we're just in a market environment where you're starting to see a lot of different stocks go, and that's why be bearish right now? Like, people want to be bearish and they want to find a reason. Some people coming in even yesterday and saying the government shutdown, this is it. This is the eventual crash that we're going to get. The pain trade is higher, folks. There are still people underinvested. There are still people, that are looking like and saying, well, these nosebleed valuations don't make sense. Well, that's not the case in pharma. Pfizer's trading 9 times earnings after a 13% run. Merck is like 11 times earnings. Bristol Myers is like 9 times earnings. If these stocks go, this could be like another China move, because we know Baba, Baidu were trading 11 times earnings, 13 times earnings, and they continue to explode every day. So this market loves momentum. A friend texted me yesterday and is like, is it all just algos, like momentum algos? And I'm like, yeah, a little bit, but as everybody else, it's like individual traders are all about momentum too. The stocks start going, they love breakouts, they love momentum. All of a sudden, another beaten down sector getting momentum. China started getting its momentum late August. We know Bob has run from 120 to 182. We know Baidu in that same time frame has run from 90 to 140. Why can't the drugs continue to move? So I think you got to be looking at dips here. Now, again, you get those checkbacks. Maybe we get like a check back to like yesterday's low or something, or somewhere in there in the next couple days. Probably time to strike. But I mean, if you're putting these drugs, and we said this in the STN room yesterday, yesterday morning before they had the second day of moves, I'm like, if you're putting these in your long-term portfolio at a 10-year time horizon, I'm not sure you can go wrong. You can always go wrong, but I'm like, it seems like a no-brainer. We got an aging population. We're still going to need drugs. AI isn't going to like all of a sudden cure all of us, and we're not going to need drugs.
It's not.
Well, maybe it is. Maybe AI is going to come on. We're not going to need drugs anymore. Well, if they kill us all, we won't need drugs. So if they go full Skynet, that would be really bad for the drug stocks. If the Terminator ends up being right, AI ends up coming out, killing us all, because I don't think the bots are going to need the drugs. So they'll still need the energy. The energy stocks will still go up in the event of Skynet. You see the AI stocks still flying in the events of Skynet, but the drugs won't do. So that's your bearish scenario. That humanity ends, that's probably bad for the drug stocks.
You seem relieved this morning, Triple D, that there was a little bit of a pullback, a little bit of a reversal from highs in the pharma names. Seems like you're kind of like, okay,
I'd like to buy some more. I've been underweight this sector for a long time. I've had Pfizer. I've got some ETFs, so I have some drug weight, but I'd like it to be higher, but it just hasn't been a reason to be higher. There hasn't been that reason in saying, oh, this is the time. I mean, you get moves like this. Now we want that, inevitable dip, because you do get that dip, but I think that's when you want to strike. It's like my Baba, that I bought. I waited for the stock. It broke out, went to 140. It got the check back to 130, and I put it in the long-term portfolio. I'm like, this is my chance. Give me a 10-point check back. One move, 120 to 140, back to 130. And that was the absolute low. I bought it 130.30 that day. The low was 130.06. I'm still long. The stock's $187 a month later. So, I mean, when you get these huge moves, you usually get a little bit of profit taking, and that's when you strike. Because you know what? It's only, and again, it doesn't work on all stocks, because some of these stocks are story and fluff. But I mean, you got fundamental valuation support in those China stocks. You have fundamental valuation support in those drug stocks. Value traders are all in there. It's just a matter of like, do the momentum traders get in? So momentum traders go in, then who's selling? And I mean, that's kind of where you're at in the China stocks here now. Like, who's selling? Because you still see Alibaba, and after it just ran 50% in a month, You go and you look at the multiple here, just to bring it up here. I mean, you
Yeah.
think about NVIDIA at 40 times and Apple at 37 times, and Microsoft 37 times. And then you got Alibaba 21 times. That's after the stock just went up 50%. It was like 13, 14. Baidu is another one.
Wow.
I mean, you look at, wow, what a move in Baidu. It's run 50% in the last month. 50% in a month. That's an incredible move. Its valuation's got to be way overdone. The PE, guess the PE on Baidu.
Is it below
12.
10?
It's
12?
12 times earnings. 12.
It's wild.
So you have momentum and value. It's why the stocks don't pull back. They give you a little
Sure.
dip because you're getting some profit taking in there, but then they're relentlessly higher here too. So I think the pharmaceutical stocks, the drug stocks, could do the same thing. I think they could. Now, again, you never know with Trump. He could come out, tomorrow and say, no, we're going to get these drug prices lower. We're doing something different. But, this has kind of been a catalyst that everybody's been worried about getting drug prices lower. And the catalyst here a couple of days ago, correct me if I'm wrong, Brent, is Trump working with these drug companies here, correct?
I think so. Yeah.
That's what
I mean, Pfizer kicked it off, right?
Yes. And that's what's been holding them down. Is like, oh, we're going to get, a drug caps. We're going to get pricing caps. We're going to get all these drug prices lower. And there may be a way that they're going to still work with that. But I think there's a lot of news here that, the biggest threat to pharma has been Trump. And if Trump starts working along with the drug companies here, just maybe, imagine him take a stake. Imagine if the administration took a stake in a drug company. I'm not, it's not impossible. I'm not like, there's no rumors of that yet, but we saw what's happened here when he took a stake in Intel, in MP Materials, in LAC, which we can talk about here too. I mean, he's all about like going and taking stakes and stuff now here too. That would kickstart the whole sector as well. So I don't think I want to chase the drugs here, but I want to be ready for an inevitable pullback. We're getting a little bit of dip here this morning. Let's see if it materializes into something else, because I think the drugs are still maybe going to be a place to be going forward.
I think that we're seeing a little bit of like healthy rotation today too. We have this run in healthcare pulling back a little bit, maybe a little bit of profit taking, and then in its place, I think we have chips and tech. This is a familiar rotation that we're comfortable with, right? If pharma was going to continue higher, I feel like you'd be getting a little more anxious than you already are that there's like a shift in the market happening. But if we see this rotation this morning away from value names like a healthcare into chips into AI plays, we're used to this. We're used to this in this market.
Yeah, and tech is still the best place to be. We can come and, talk farm all day long here, but, to Jay's point in the chat, the growth is not like it is in tech. So, right. I mean, again, people keep flocking back to tech because, hell, AI is going to change the world, folks. It's going to be different. That's what's going on here. You're seeing this, market that's just relentlessly buying every AI stock possible because it feels like that it is going to change the world. And I'm on that bandwagon here too. So every time you get a little dip on any of these AI stocks, it's just another opportunity to add to those positions here. So AMD this morning, ripping higher. It's up 100 at 169. It looks like it put a lot of work in. I mean, when you look at the chart of AMD and bring it up, it looks like, get away from this and go to the 90-day here, maybe, Brentster, like a little bit farther out. You can just see the hook, see it working. All the work it just did for a month there, putting in bottoms, spooking some people out. Oh, you got competition from Intel. Now they're going to work with Intel, apparently. Oh, like Lisa Su, I don't know. NVIDIA is still the best place to be. It's just been putting in work, fears, rotating to stronger hands. And now it looks like it wants to start going here again. It makes a hell of a lot of sense. Now, valuation on all these are tricky because they've come so far, where, AMD back in April was $81. At 26, 27 times earnings, AMD feels like a no-brainer. At 50 times earnings, it gets a little bit more interesting and a little bit more tricky. But I guess you just got to stop looking at valuation here. From a trading perspective, valuation doesn't matter at all. Write that down. From a trading perspective, write it down. Go ahead, get your pen. From a trading perspective, valuation doesn't matter. You can trade anything. You can trade, all these altcoins and all this other stuff that doesn't make any money at all. Momentum is all about trading, like looking at the technicals, looking at, where the momentum is, the story driving the bus. From an investing perspective, valuation can matter. You got 10, 20, 30-year time horizons. Valuations matter. Ask anybody who bought tech stocks in the year 2000. Valuations matter. Took them 15 years to get their money back. And so in some cases, they never got their money back. So they do matter. But from a trading perspective, we're speaking to you traders here right now. When the stocks start looking good on the charts, when the stocks start getting the momentum going, these algos start igniting here, and you're off to the races here. And you can run around and say, oh my God, Tesla's 200 times earnings as much as you want. But the story is sexy as hell. And you know what? These Tesla investors don't care about valuation. So at a certain point in time, maybe valuation matters. But in the short run, from a trading perspective, valuation doesn't matter at all.
Triple D, a couple news items here this morning overnight that may or may not have gotten the AI trade going. I'll let you be the judge, and you tell me if you think there's another news item that might have got us moving here in the chips and the AI trade. So we had over late yesterday, we had Samsung and SK Hynix partnering with OpenAI for the Stargate project. That is the Oracle AI, OpenAI partnership, Stargate. And then also Nebius and Microsoft announced a furthering of their partnership. Nebius is going to use Microsoft to access over 100,000 NVIDIA chips. I don't know exactly what that's about. Did you see anything else on like the tech chip AI front that you think could have sparked
there's
a little
multiple analyst
attention?
commentary here on some notes here, but it's just the momentum. It's just that people want to be in these stocks. They need to be in these stocks. These stocks, some people have missed the boat. Nebius was one that we talked about and covered very much in the STN room. When they got the original deal from Microsoft, we're like, this went from a story stock with basically no revenue. They had $100 million in sales previous quarter to a $17 billion contract. All of a sudden, that story turned into a contract. It turned into like real money, bringing in real money. And that's why we were saying at $90, it feels like a no-brainer. And now it's 120. So, that's where it's hard to, some of these story stocks eventually do get some contracts, and that's what you want. So then you get fundamental support behind it, and now you get more details on the Microsoft contract, and the stock's making new highs again. So, you got to stop being so backward looking, because people do this too. They go on MBIS and they want to make their freaking fundamental arguments, which don't matter at all in a bull market. And they say, well, NBIS is trading 100 times sales and 150 times earnings, and this doesn't matter whatsoever. Like, this is crazy. It's going to just tank one day. Well, yeah. Well, that was when they had $100 million in sales last quarter too, folks. They got a Microsoft contract for $17 billion. Now you start thinking about this. Well, it's $28 billion, but they got a contract coming in. Now that is over the multiple years. But what if they get another contract? What if there's something else happening here? So don't be backward looking. This is a different story. The NBIS stock went from story to like a company with real revenues overnight with that Microsoft contract. It changed everything. And I'm not surprised the stock's up 30% from where it was at 90 after it gapped up. Like I was saying, I don't usually chase gaps, but that was one that probably was prudent to chase.
The Nebius news, in my opinion, also validated some of these like data center / AI power names, like a CoreWeave. Like, what do you know? Look at when CoreWeave started perking up, right around the time that Nebius deal was announced, and CoreWeave is up a good $25-$30 since then. You have your Wi-Fi's and your IRENs that have gotten sparked following that move. So AI is the trade here. It's bleeding into over other spaces. This is the reality of the market. We got to stop thinking so practically about the market and just kind of like plug your nose and plug your ears and just jump in the water, the AI water.
Well, yeah, and you get out. There can be crashes, folks. It can happen. But there are so many people underinvested here. And there's so much valuation support in other sectors here too. Like, the difference between now and the year 2000 is like, there was a lot of stocks that were like I said, I always joke back, Walmart was trading 55 times or 60 times earnings in the year 2000. It was bloody Walmart. So, there was just stocks with ridiculous valuations across the board. I think Pfizer was 40 times earnings or something back then. Now it's 8. And Pfizer has never even sniffed back to those highs of $45 that was in the year 2000. But so again, I don't know, like, you stick all these stocks in your long-term portfolio and, just, say, well, they're going higher. I mean, you can, but got to kind of stop yourself out on a few of these. But can you, stick these into your trading portfolio and go long with some prudent stops? Absolutely. That's where everybody's making the money right now. So I guess it depends on which hat you have on. I mean, from a value perspective, and I am a value investor, I'm loving this market. The value stocks are starting to pick up. I had a fantastic day yesterday. My long-term portfolio was up 1.4% against SPY. I think was up 0.4%. And it's just because a lot of value stocks are really picking it up. Now they've lagged, but those stocks picked it up. But then I've also got the AI kicker because I got stocks like AMD, I've got stocks like Nvidia, I still own Tesla. So I mean, I've got some growth in there too. And I mean, maybe that's why you have a balanced portfolio. But the people who are just full on in all momentum growth stocks right now are having a great year. Since April,
Sure.
like they didn't have a good start. First quarter would have been ugly for them, but since April, I mean, they're just killing it. And what have they learned? That if I buy the dip, I make money. And that's why the relentless buy the dip mentality remains. What's derailing that? Interest rates are going down, folks. They're going down. I mean, you start thinking about all this stuff and you're like, well, crap. There's a lot of reasons to think that, hell, this might just be for real. So I think it's, I think we're more potentially in the earlier innings as opposed in the ninth inning like the year 2000.
Triple D, we've covered pharma and drugs. We've covered AI and tech and chips. Let's keep the diversity going here. Let's talk about a name last night that I know you traded. Also in another varied space here, rocket companies. Pull up the rocket chart. We had quite a good time playing around with this little something that we saw in rocket companies last night. Why don't you tell pre-market prep about the huge imbalance that we saw in RKT and kind of how it played out on your end of things?
This is classic, like the market day trading stuff where, everybody gets screwed. So this was like your class, like people got really screwed on this last night. So this comes out at 350 with a 25 million share buy and balance. The bloody volume at that time was 30 million. So basically a buy and balance on the close for as much as the entire day's volume. And the stock runs, and the stock goes from 1990 up to 2055. And then it starts going down, and you can start seeing the imbalance starting to pair off where people are like, I'll short it, I'll short it. I was throwing out orders higher too if it wanted to gap up. It looked like it was going to try to gap up. Well, with about like 30 seconds to go, it was showing a 6 million share buy imbalance still. Then she flipped to sell, and the damn thing gapped down 70 cents. Everybody who was buying ahead of that imbalance got caught, and then they didn't get out, and then the thing closes at the low at 1959. Then what happens is the company comes out, like perfect storm for everybody who was caught in there. Companies comes out and throws an offering. So they do a shelf. I don't think we have any, details on this yet, but they drop a shelf
I don't think so.
on a potential offering, an S3 ASR, where they could do an offering. Now we haven't seen anything further with that yet, I don't believe. But I mean, now people are spooked. Oh my gosh, they might actually do a stock offering here. So the stock's down another 3.78%. So the poor and balanced traders, and they're not poor, you got to be really careful when you're trading this stuff, because I bought it too, remember? And I'm like, I don't like that it's leaking. Like, I don't like the balance going from 25 to 20 to 16. I'm like, I'm out of here. I can see what's happening. There's too many people. It's going to get crowded. So, I sold. And then, I was trying to short it, but I had no anticipation. I thought it might still gap up, and I was like ready to short on the gap up. And then it gapped down 60 cents, and everybody got caught. So when you're trading imbalances, for years I've done them in a different way now, and this is stuff we talk about in the STN room too. And if you don't know what an imbalance is, it's okay. You can just tune out, or I can quickly explain it. So basically at the close at 350, the NYSE and the NASDAQ posts these closing imbalances. These are orders that are marked for the close. They'll post how much they have of, a difference between the buys and the sells. So when they post a 25 million share buy imbalance, tell you as a cumulative whole, we have 25 million shares to buy on the close. That's an advertisement to traders to say, hey, short us some stock. We need some other sellers on the close. So what traders will do is throw out short orders thinking it's going to gap up, and then buy the stock in the open market, and they think they're going to make that difference. That used to work like a charm in the year 2000, 2005, even 2010. Now these trades get crowded. These numbers get gamed. There's all kinds of crap going on, that you don't even know. High frequency traders playing around with you too in there. And, so you can't believe half the stuff you see, or 99% of what you see. So it may have been true, but there's so many more traders that came in to short, they overcrowded it, and the stock actually ended up going the other way. So that's what
Wow.
happened. And then you get an offering. So now all those traders who bought last night, 25 million worth, shares worth, are all caught. They want to take a loss because, hell, this is a bull market. I would take losses. The stock will come back. So then they're hoping at 1959 is going to pop back to 20. Now it's down another 70 cents. So, I mean, I think you're going to wash out those day traders too. And you have the potential of an offering coming at you as well. So lots of reasons to probably say, I'm going to lay off Rocket today. I know a lot of people want to come in with a 3.62% dip, but maybe, just maybe, it might be a time to lay off it, because if that offering drops tonight, stock's going to end up going lower.
We know that the companies that have been doing shelf offerings have been doing offerings shortly after. So I think that's some of the precedent that Triple D is mentioning there. But a shelf, like in the filing last night, the language that Rocket used and what companies use a lot of times in these filings is from time to time. That's what they said. So it can be that they do an offering. It can be that they don't do an offering. That's what the nature of the shelf is. They can tap the shelf if they want to, but they don't necessarily have to. But in this market environment, companies have absolutely been tapping those shelves, and they've been doing it pretty quickly. What do you
I
got
want to
there
go
on
to the
screen from
question on the
Boris?
board.
Yeah,
So this is a
sure.
fantastic question. We had our guest, Joel Kalina, answer this question for us yesterday. So the question again, here, I'll just show it. Adobe doesn't go anywhere but down. Any thoughts? Why does Adobe, why does CRM not participate? Joel Kalina, who is an excellent analyst, yesterday answering this question. I'm going to reiterate it here as well, because everybody's got the same question. Why do the software stocks? What's wrong with them? You know what's wrong with them? Is that AI is actually going to eat their lunch. This is the problem, is
Sure.
Adobe's lunch could potentially get eaten by AI. That's what Joel was saying. And I kind of think the market is pricing this in, that there are going to be some winners and losers in AI, and everybody automatically assumes every tech stock is going to win because of it. But that might not necessarily be the case. There may be some losers. I do think the relentless Benioff advertisements of Salesforce.com with Matthew McConaughey on there saying we're an AI company, Salesforce, AI, AI, AI. He's trying to pound into your head that this is the great AI company here, but the market is telling you that it actually may not be the case, and AI actually could, sure, Salesforce is going to have a little bit of AI, benefits, but they may have more detriments in the long run. Some of these software stocks are having their lunch eaten. Maybe this AI is going to figure out how to eat all their lunch, and I think that's what's getting priced in here. So they're going to be winners, and they're going to be losers with AI. NVIDIA is an obvious winner. I think AMD is an obvious winner.
Sure.
But then you get into the Salesforces and the Adobes, and it doesn't become so obvious anymore.
It's a little gray.
And then you're like,
yeah,
what's going on? Why does the stock not participate? Why does Adobe only go down? I mean, valuation perspective here, we can go do that as well. You can look at Adobe and saying, hell, this stock's trading 21 times earnings at 14 on a forward basis. This stock is dirt cheap. Why would I not buy this? This is a no-brainer. Well, if AI actually starts figuring out how to do some of their businesses more efficiently here, there's going to be problems. So I don't know if that's going to case, but CRM's 34 times earnings, only 19 on a forward basis. Those estimates could come down. So I think we have to be very, very careful with just certain sectors. And when I hear somebody who does their homework like Joel Kalina and knows a lot more about the intricacies of tech, and he's warning about the software names, and the market is telling you the same thing. We got Adobe trading at 2020 pricing here right now. We have Salesforce.com, trading back to where it was in 2022. I mean, you got to start thinking that, hey, that maybe there's going to be some winners and losers, and maybe some of these losers are going to be some of these software names. So I'm somewhat scared to think that all these, every tech stock is going. I don't think you can think that every tech stock is just going to rally relentlessly here because of AI. There are going to be some stocks that actually lose to AI, just like there's going to be, the labor force. We talk about that, like obviously skilled labor is still going to be needed, but you get into some, monotonous jobs, some of the smaller ones, some of them, they're going to be taking away those jobs. And I think in the same thing in software, it sounds like Joel is saying, and I kind of agree with him, that some of these, businesses here are going to lose to AI. Going to be winners and losers here, folks. You kind of got to do your homework.
Look at the comment on screen. Microsoft CEO said software as a service, SaaS, is dead. AI is killing it. OpenAI and Google are killing Adobe, Rebel says in the chat. Josh Lakes Trading says software is in trouble. This is an excellent point, Triple D. I like the angles here.
This is really scary for anybody who's just looking, and coming in and just looking at PEs and saying, oh, this is a no-brainer here. I mean, industries are getting disrupted. We've talked about UPS and FedEx. I've said those are value traps. So the last 100-point fall in UPS. I've been running around saying it's a value trap. Drone delivery, a lot of things are going to change here, and I would stay away from UPS, even despite it having a 7.76% dividend, trading like 8 times earnings. There's a reason for that here. There's disruption happening there, obvious disruption, but not so obvious in those software names, but starting to become obvious here. So I think we've got to really start thinking about, like, where is AI going to disrupt? And I think the software names are primed for disruption here. So we've got to be really careful. GT Tucker saying Adobe's the next newspaper company. I'm not sure about that. I'm going that far. But what I will say is there's a reason that this stock is not participating in one of the best tech markets that we have seen in a long time. So if your tech stock is not participating, is sitting down at the April lows right now, you are in the wrong tech stock.
Triple D, we have a little bit of a Tesla discussion that we were wanting to get to. We also have some news, some confirmation out of Oxy. On Tesla, we are expecting auto sales around 9 a.m. Which one you want to talk about right now? You want to do a little Tesla? You want to do a little Oxy?
We'll cover Oxy just in 2 seconds because Tesla's conversation is going to be more. So we talked yesterday. Cool. People were like really buying Oxy or getting excited about it. And we know that it was just going to be a portion of the business. The rumor materializes. I said best case scenario, you get 50. You're not getting even the best case scenario. This, the thing's up 50 cents only on the deal. So Berkshire officially acquires OxyChem's unit for $9.7 billion. So it gets a little bit of a pop, but is this like the catalyst to get Oxy going? No, it's not. Is this a value trap? Yes. The oil stocks? I don't know, man. Hard to get excited about these oil stocks. They've had a nice run here. They've come back a little bit with the value trade coming back here. But do I think Oxy's the stock where I want to put all my money? I want to go and invest in this AI theme. I'm going to take all of my money and put it in Occidental Petroleum? Really?
Said no one ever.
Exactly. And if no one's saying it ever, maybe you shouldn't say it either. So I think Oxy has come a long ways from its 34 low back in April. A rising tide lifts all ships unless it's Adobe. So I think your $50 resistance level remains. $50 remains. Target remains. Done. Out. Not for me. Sorry, Mr. Warren Buffett. You can keep loading up. But, Warren Buffett is also 94 years old, and he knows he's done it his way for a long ways, and he's all about value. But I think Occidental is a value trap.
Strong comments there, Triple D, but I like them. Let's save that Tesla
Rivian. We just got Rivian numbers here.
Whoa, we got Rivian numbers. Okay.
We did. We just got Rivian numbers. We'll give you those quickly here. Thank you, Wellbeing Warrior, for letting us know here. Rivian just reported 8:30. 2025 delivery guidance. Those numbers. If your numbers are good, I don't have them in front of me. I'm going to take Wellbeing Warriors numbers here because it looks like he did 13,201 versus 12,995. So slightly beat. I don't know if it's enough. The stock dipping back here a little bit, but it's starting to show a little bit more life, Rivian here. So I don't know if this is going to be one that just gets crushed. What I will say is, and we'll talk Tesla here in a few minutes. Tesla delivery should come around 9 o'clock. They're usually just after 9 o'clock. What I will say on Tesla is I think if they beat, the stock rallies. If they miss, the stock dips and the dip gets bought. So I honestly think, and I've said this 2 days ago, I tweeted out when stock was 442. I think Tesla's $500 by the end of the year. It's 468, just had a 30-point run here. I wouldn't be surprised if the stock, if it dips, I'll be buying the dip.
Conviction. I like it, Triple D. Let's go get our guest, Tom Bowley from Earnings Beats. Here we go. Tom Bowley, Chief Market Strategist at Earnings Beats. How you doing this morning?
I'm great. How are you guys today?
We're hanging out.
We're wound up as always. This is what we do in the morning. We drink our coffee. Actually, I don't even drink coffee. I just come in here and just wound up on market momentum here. How are you, Tom? That's the question.
Yeah, I'm good. I was enjoying your conversation there on Tesla because that was one of the stocks I really like here right now.
Ooh, okay. Let's continue.
Let's keep talking it. I know.
I like that. We're gonna
don't tempt this guy with a good time.
I like it when
Yeah, I
people
mean,
agree with me. Everybody likes it when people agree with them, don't they? Isn't that kind of like a thing? Like, people don't like it when they're. But anyways, it's fine. If you want to take the other side, I'm cool with it too. But tell us, about Tesla. What do you think?
well, I mean, if you go back just these last few months prior to this run, we were squeezing in that triangle for a while. We had a symmetrical triangle where, you had the lower highs coming across the summer, and then you had the rising lows. So we were really squeezing, and I was waiting to see which way we were going to break. And since we've broken, it's been nothing but straight up. I actually think your target of 500's low for the end of the year.
Oh,
This is if you look back, Tesla's been consolidating under this 450 to 500 area really for the last 5 years, 4 or 5 years. And I think a breakout could really lead to a really quick rally in the stock, much, much higher. I wouldn't be surprised within the next year for a double on Tesla or more.
Well, and yeah, my 500 target was by the end of the year, which
Right.
actually, who knows, if they have good sales, could be by the end of the day. What Tesla, you never know how these investors work. But this is like the ultimate story stock. I mean, you think about like how much stories have driven the bus since we have social media, the Reddit boards, the X, Discord rooms, they all, that's driving investors into the market, bringing the younger person. They don't want to hear about Occidental Petroleum. They want to hear about the sexy news story. They want to hear about humanoids. They want to hear about self-driving cars.
Right.
I mean, it's the ultimate story stock. How do you short the ultimate story stock in the story stock market?
I agree with you. I mean, to me, it's like a Palantir or, these exciting stocks for the next, potentially 10, 15, 20 years. I mean, going back, look at Occidental Petroleum. I kind of thought your reference was great. It's a Warren Buffett stock. It's not it's not our generation stock. Maybe it may work out great over the long term, but I would rather have a stock like Tesla that's got potential for a very significant run in a fairly short period of time.
What else do you like? If you like Tesla, he's got to be a few other stocks that Tom Bowley likes.
Well, I like growth, but historically growth tends to outperform, at least throughout the secular bull market. Growth has outperformed value primarily from the months of May through August, and then kind of takes a back seat. And we do see a little bit more value that comes to the forefront in the fourth quarter. So I'm actually a little boring right now because I like the financials a lot. I really like the banks going forward with lower interest rates ahead. I'm anxious to see this non-farm payrolls report tomorrow.
We don't get it. We're not going to get it.
It was horrible. We had negative jobs on the ADP. If we see negative jobs on non-farm payrolls, I don't think there's any doubt that we're going to get 2 more rate cuts in 2025. And I wouldn't be surprised if we saw a few more in 2026. And, from my background being in public accounting for 20 years, I audited banks. And I know what those, short-term rates falling does for the small and mid-sized banks, because that's what I used to audit. And that immediately cuts their costs, I think opens up more lending possibilities in that smaller and mid-sized group, which is another reason why I like the IWM, which is the Russell 2000. Maybe some people don't realize it, but in the last quarter, in the third quarter, the IWM gained 12%, the NASDAQ was up 9%, and the S&P was up 7%. And I think that outperformance is going to increase in the fourth quarter and maybe in the next year as well. But yeah, on a longer term chart, if you go back a little bit there, you actually see that there's a long-term head and shoulder bottom where if you look over, let's see here, after the top,
kind of like right here,
top right there, come down into the left shoulder, back up into the neckline.
Okay.
Now a little bit further, I can't tell the dates that you've got there, but
right here we're on July 15th.
What's that?
This is July 15th that I'm crosshaired over right now.
Yeah. The top came after that, though. It's that later top.
This one right here.
That's when I think the pattern starts. So you come down into the inverted or reverse left shoulder, and then you come up to set the neckline. And then you drop into the head, which was that April low.
I see it. Gotcha.
You establish the right side of the neckline. You see that one big red filled candle.
Yeah, right here. I see it now.
And then we broke out of that. And that to me measures up to about 280. And I said back at the beginning of the year, I thought the Russell 2000 could run to 300 by year end. And I think, if you look back at history of the IWM, when it really goes, it goes, and it goes very quickly, almost like semiconductors. And so this is a group we've already seen biotechs breaking out. Biotechs have been really strong, and that's a pretty big area of the IWM. Banks, financials, another big area of the IWM, and I think that's an area that certainly the theme sets up for in the fourth quarter anyway. So I think this is a group that is going to run and going to eventually hit that target up near 280, and I wouldn't be surprised to see 300 by the end of the year.
Boring, I'll tell you this, Tom, boring pays the bills, right? So, I mean, boring's fine with me. Do you have like a favorite, I don't know if it's big banks that you're kind of looking at in the financial and the bank space? Do you have like a favorite big bank that you're kind of eyeing?
No, I think the last time I was on the show, I was pretty boring. I talked about the KRE, which is the regional banking ETF.
Oh, that is boring.
That's definitely going to be very, very boring. But I think it's a situation where we could probably see an easy 20% gain over the next 3 to 6 months, which works for me. I think a stock that I had mentioned the last time I was on, one of the regional banks, was EWBC, East West Bancorp. And that one did, it came back up. It's done pretty well, but it's sideways consolidating. I really like the pattern here. Just kind of waiting for the liftoff and the breakout above these recent tops. But there's a number of banks. I mean, if you look at some of the bigger banks, Citigroup has been probably the leader in the large cap bank area for quite a while now. That one just continues to move up. It's struggled a little bit here recently, but I think that could be an opportunity. JP Morgan, of course, is one of the better ones, big one there. But yeah, I mean, I really like this space, and I think I favor the smaller ones actually a little bit better, just because I think that these upcoming rate cuts are likely to benefit the small banks more than they're going to benefit the larger banks. But I think they all participate in it.
Well, they need lower rates. Let's be honest. Some of these banks, remember, we all forget about 2 years ago, we had this regional banking crisis where, these higher rates were absolutely killing these lower banks. There's all these long mortgages. They had lent all this money out for 25 years at 3.5%. And now they're bringing it in at 4.5%. They're like losing money like crazy. So as interest rates come down, these regional banks are in much better shape here. I mean, we've forgotten about that, but it was scary there for a little bit with some of these runs on these smaller regional banks here. So as interest rates come down, they're only in better shape.
Yes. Yeah, to me, it's an immediate drop to the bottom line. I mean, when you're looking at net interest margin, because many of these banks, I mean, the Fed funds rate is what banks borrow from one another or from the Federal Reserve at. So, if all of a sudden, you're a homeowner and somebody says, hey, we're going to cut your mortgage rate, or, with an arm or whatever, or just said, hey, we're going to, put some more money in your pocket. You got more money to spend. You got more money to invest. And that's essentially what position the banks, these smaller banks, are going to be in. And it's been a while. I mean, the Fed's mandate recently has been to follow inflation and to keep rates higher for longer. And I think, there was really a big change in their demeanor in this last meeting, moving more towards being much more dovish. And I think that's going to pay off for these smaller banks in a big way over the next several months.
Tom, let's just flip this discussion back. Let's talk about rates and specifically here, because the market thinks we're going to get 2 more cuts this year. Unfortunately, to our understanding, is we actually won't get the jobs numbers tomorrow because of the government shutdown.
That's
so we kind of just have the ADP number to go on, and that's it. I mean, let's look beyond. So let's just assume we get 1 or 2 cuts the rest of this year. What do you think is the 2026 outlook? Like, once Powell's gone, and I've been saying, I think Trump's going to put in somebody who's a pretty dovish chair in there, who's probably going to be influential to bring rates lower. So I kind of think the path for lower interest rates, even despite the stock market at all-time highs, is there for 2026. Is that your thought process here as well? What do you see out further for rates in 2026?
Yeah, I see rates going down. I've been talking to our members at Earnings Beats, and I feel like we're going to get the 2 rate cuts this year, and I think we could see at a minimum another 2 or 3 in 2026. I think the thing that's held the Fed back has been inflation, which I could sit here and talk for a long time about Powell. I'm not a big fan I think he's waffled quite a bit. He's gone back and forth. First he's, data dependent, and then he comes back and says, well, sometimes we have to, predict what's going to happen down the road. And all of a sudden he's not data dependent. And I've never quite figured out exactly what the Fed looks at in making their decisions. But I will say, if you look at the path of inflation over the course of the last year, the monthly readings have been coming down. We did have a spike, and I think that spike came in January of this year. It might have been the December reading that was reported in January. I can't recall. But we had that one spike in the inflation rate, core inflation rate, that went up to like 0.46.
Yeah.
And that is inflating the annual rate. And when we get to that level, when we start 2026, that's going to go by the wayside. That's going to drop out of the calculation. And I think you're going to see the annual rate drop down more toward the middle of the twos. And I think there's going to be much, much less concern about inflation as we go into 2026. And I think instead, the focus is going to be on what we're seeing in the economy. And, some say the economy is being resilient, but when you look at the jobs numbers the last 5 months, I don't really look at this as a resilient economy. I look at it as a teetering economy. And with the ADP employment numbers coming in negative this week, I don't think the Fed's going to have much choice but to cut. And that seemed to be consensus. So, I think there's going to be more cuts in 2026.
Tom, let's talk pharma here, because cuts would be good for pharmaceutical stocks as well. And big pharma has had a big couple of days here. That's been the sleepy value trade for a long time, but it awoken like a giant in the last couple of days. Pfizer going up 14% in 2 days. Merck lifting up over 15% 2 days, which I can't even remember the last time I've seen moves like this in these stocks. Lilly had a huge moves. The XLV had huge moves here. What are your thoughts going forward? Is this just another rally to sell on these pharma stocks because, the sexy story isn't there? Or is there something to this?
No, I think there's something to it. I think that, first of all, a secular bull market, normally we see, rotation. That's the hallmark of a secular bull market. And like I said, I do think that maybe the value trade is going to make a little bit more sense in the fourth quarter. I don't think that means that it's an outright sell on some of the growth areas. I think growth continues to do well in a low interest rate environment. I just think that there's a lot of stocks that need to play some catch up. And I think we were seeing some really quick catch up the last couple of days on some beaten down, value oriented dividend paying type stocks. I mean, Pfizer, I think, was a great potential buy for anybody who's more income oriented. I mean, Pfizer's dividend yield, I think, is 7 or 7.
It was over 7. Now it's down to 6.3 with the recent run, but it was over 7 2 days ago.
Yeah, I mean, if you look at their long-term chart, I mean, the stock's been going down for a long time. It's been basing, and yesterday to me looked like it was a change in character on the chart.
Yeah.
If you drag that chart back for a while, I mean, we've been downtrending, and we've been kind of in the mid to upper 20s here for quite a while. And then all of a sudden we made a move yesterday that takes us to a multi-month high. I think that there's more room to run here. Yeah, going across there. I mean, we've got a couple of pretty big levels there that we're about to clear, which takes us back almost, getting closer to 52-week high. So personally, I think there's a lot more room to run here on many of these stocks. I mean, it's hard to chase them after 2 big days. When you look at Pfizer and you see its range for 10 months, and it pretty much, goes about 60% of its range in 2 days. That makes it a little tougher to jump in on it. But I do think that there are going to be some opportunities. There's one stock in this space that I'm watching that hasn't broken out. I think looks pretty good, is AGIO. So that's another one that's maybe a little smaller. But yeah, I mean, we've had 3 different tops there. And there's one indicator that I use over at Stock Charts, which is an accumulation distribution indicator. And the accumulation distribution indicator is rising on this stock right now. And that suggests to me that the stock's being accumulated. And even after the gap down that we saw recently in early September, we immediately came right back up. And it feels like the stock's festering, getting ready for a big move. And if it does break out, I mean, the move on the way down was straight down several months ago. And I could see a similar move on the way back up. So this is one that maybe didn't get quite as much love yesterday, but I think is setting up potentially for a big move.
All right, Tom, really, really good discussion here. Gave us a few good trading ideas. We got some good macro, good macro picture there. Really appreciate you coming on this morning, Tom.
Always have fun with you guys. Let me know. Come on anytime.
All
Awesome.
right, appreciate it,
Thanks,
man.
Tom.
Thanks a lot.
All
Have a
right.
good
Have a
week.
great one.
All right, later.
Tom Bowley,
Triple
earnings
D.
beats. It was good.
Tom's good, man. I like that.
Yeah, it was good. I like that he agrees with me on Tesla too. I always like when people agree with you.
Let me kick in here with a little heads up for our wonderful sponsor, Hive. This show is brought to you by Hive Digital Technologies. Let me get the overlay up here.
Sure.
There she is. This show is brought to you by Hive Digital Technologies, a global leader in green powered data centers for Bitcoin mining, high performance computing, and AI. I'll pull the chart up in just a sec here. Triple D operating with nearly 0.5 gigawatt of renewable energy. Hive is on track to capture. Oh, there you go. Thanks. Here, let me adjust it. Take a look at the chart while I'm reading this. There we go. Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. In the bottom right corner of your screen, on screen right now, is a little QR code. You can scan the QR code, or you can click the link in the description of this YouTube video to learn more about Hive. Thanks again, Hive Digital Technologies. Triple D, you want to go to a few ratings that we had on our radar this morning?
Yeah. Wherever you want to go. There wasn't a lot from the ratings parade, but there was a few of them. So if you got a couple, we can grab
How about
them
like
as
a night?
well.
I saw a Nike. Nike got an upgrade? Question mark? Was it a downgrade? Hold on. Nike was an upgrade to overweight at KeyBank.
Nike had its big move yesterday. I'm still long a little bit of Nike. I actually bought this last night on the upgrade. Stock is not lifting as much as I thought. I thought we'd get up to 75 on the upgrade, but it's already had a big move here. I mean,
Sure.
I don't know. Is Nike my stock? Probably not. Is it another rally to sell? Probably so. So I think, longer term here, I think it's getting short-term pop on the rating and the okay earnings here yesterday. I know Kramer last night, though, said he thinks it can go to 100. Sometimes that can be a catalyst here. He actually said the number. He's like, we bought more Nike today. And he said, I think it can go to 100. I don't think it can go to 100, but he can be a catalyst. So if other people talk about that today, maybe it's a day to, be a little bit cautious on the short side here. I am still long a little bit. I was hoping to get 75.
Another one we talked about last night. I think we talked about Nike last night. LAC got downgraded to sell at Canaccord. We noted this one last night, but I mean, what do you think about this one?
Well, I mean, it failed right where you don't want it to fail, which was the previous day's high, 753 and 755. And we got up over $8 pre-market and after hours 2 nights ago, and it just was relentless sellers. What we talked about was this rally. This was kind of known. So it had the double rally. It rallied on the news and then the headline, and then we got details on it, and it rallied back up on those details. So the algos, again, this algorithmic driven market, they don't know what's been reported and what's not. A lot of these machines are just going on headlines. And I think it kind of already had that news. That's why I was like, I wouldn't be chasing it. I actually considered shorting it, which I'm glad I didn't, because I was going to short at 730 and then it ran to 8. But I mean, it has pulled back in now here. So I don't know. I think there's easier trades out there here. It's kind of in the middle of nowhere for me.
Bloom Energy, BE, rating at Mizuho upgraded Bloom.
I believe they downgraded it.
Downgraded, excuse me, correction. Bloom Energy downgraded at Mizuho, which it makes sense. They should, right?
Stock's run so far. I mean, this is at this point where you got to be somewhat careful chasing some of these names, because we saw a stock go from 85 to 60 in a heartbeat, and then those are dips to be bought. Like 4 days ago, and the thing is down to 61, 62, it's come down enough, and then they start to lift up here again. But I mean, we've run a long ways here. Are they too early downgrading the stock? Maybe they're, from looking from valuation, they're talking different stuff. But I mean, here's a stock that really, went nowhere for a decade. 2020, and all of a sudden now it's like, oh, this is an energy play. This is, we need energy, and they're starting to buy all these stocks. But I don't know if this is a story that's potentially overdone here now. But story's still hot.
It's so funny looking at this chart from like a 30-minute.
Well, look at
chart.
that. Look at that long-term chart. That was such a great chart.
I know,
it's like
right?
nothing doing, nothing doing. Oh, it's an AI play. We're going.
And zooming out on this chart, like starting with like a 30-minute chart, you're like, oh wow, 60 from 61 to over 90, and then you keep going back, and you're like, whoa, what's going on here?
Yeah.
It's been a
It's
great
been a
stock this
pretty
year.
incredible move on some of these
Yep.
energy names. I'm just gonna say I've missed it. So,
Okay.
like I wasn't in Bloom Energy. I've missed a few of these names. And we've traded Oklo and had some fun with that here, but it's hard on some of these names for me to like say I'm gonna put my hard-earned dollars in some of these names at 90 on
Yeah.
Bloom Energy when the stock was $20 2 months ago. I feel like I'm buying somebody else's profits at this point in time.
I think you are. I think that's definitely the case.
Yeah.
One more. I want to get your temperature on rating, and then I want to ask you for some final thoughts. Heads up that we are expecting Tesla U.S. auto sales.
I think we should stay on. Let's stay on for an
You
extra
wanna stay
couple
on?
minutes to cover Tesla. Yeah. I
Okay,
think we should
sweet.
cover the Tesla numbers because I want to see
like
them.
it.
And if they don't come out by like 9:02, 9:03, we'll call it, but they might come out just
Cool.
after 9. So we'll
Cool.
stick around.
I like it.
Give me your
Okay, I
rating.
like it. The other one that I wanted you to take a look at, you just had a reaction, I think, when we were talking about this last night or this morning. I can't remember what it was. NVO, Novo Nordisk was upgraded to buy at HSBC. I think when you saw this one, Dennis, how did you react? You said something. Do you remember?
Well, a little bit like now, like we just ran straight up and now we're going here again. So, I mean, the analysts do chase price, but the stock just went up 10% in 2 days. And now they upgraded. It's a little bit Johnny come lately here. Stock is actually trading down on the downgrade. Remember, ADRs will not respond much to US or to other international. Was it HSBC?
It was HSBC, yes.
Yeah, so you got HSBC downgrading a European company. So the Europeans aren't going to care about that. It's the primary market over there. So always remember when you're trading ratings, when they're on ADRs, there's less of a reaction because this isn't the primary market. So sometimes you can get a reaction if it's a smaller company, but for the most part, you get a rating on an ADR, it's usually not going to get the reaction that it is if the company was domestic. So yeah, keep that in mind. A couple other things just before. Jay was pointing out DKNG, and I want to cover that here too. We covered this in the STN room, and we were talking about it when the stock was $41. And we talked about this like Robinhood was blasting off because of sports betting, because of, prediction market stuff. And we were like, they're eating DKNG's lunch. And they're potentially going to eat DKNG's lunch. And Flutter did the same thing. Flutter going straight down here. So if you're wondering why DKNG is so weak here, this is Robinhood. This is Robinhood. We covered this at 41, and we're like, it's hard to be long this stock here right now. I'm like, the chart looks head and shouldery, and now you get Hood coming in, bigger in the sports betting, bigger in the prediction markets. I'm like, this is just not who you want to compete with. Hood is a monster now. So I mean, DKNG going down here, I think is warranted. I think rips, or I think any type of rally in DKNG or Flutter is to be sold, because if Robinhood's coming to this market, Robinhood wants to be the one-stop shop for everything, for all betting, for all gambling,
prediction markets,
and we know, and they're gonna do it.
We know that they like knock the out of the park things that they go for, whatever it is they go for. They've gone for a lot of varied stuff, but Vlad kind of knows what people like. He knows. It seems like he knows design well. He knows style well. He knows functionality well. It is the management at Robinhood is just
top notch.
Top notch, premier.
I think we've got to continue to be in that. Like if you're competing with Robinhood, it's going to be tough. If Robinhood wants to come and piss in your pool, and that's what they just did with DraftKings and Flutter. And I mean, we've known this is coming for a while, but now we can see them ramping it up. I mean, this is not good news for DraftKings. I mean, you've got a stock, and just, sometimes fundamentals matter when the momentum wanes. So DKNG, it's got some fundamental support. They make some money here. But, I mean, they're trading at 16 times forward earnings. It's not crazy, but they're getting disrupted here by Robinhood. I think you got to sit this one out. So just jumping in and saying, oh, DraftKings will be fine. Flutter will be fine. I don't know, man. Everybody seems to be like all over Robinhood stuff. I think they're going to lose some customers to Robinhood. That's a problem.
Robinhood wants to come in and piss in your pool. They're going to do it. Guess what?
It's like the Amazon of the bro. Like I argued yesterday. I don't know if I argued on PreMarket Prepper in the STN room or 2 days ago that Robinhood could eventually be the most valuable brokerage company. It may be going there. It's crazy to think about.
Maybe not that hot of a take. It's kind of crazy that maybe that is not that hot of a take, but Yeah.
Yeah. I got to give a shout out to my buddy Luke Jacoby. We'll give a shout out to Luke because I was talking with him last year, and he says if I was buying any stock to go all in on, it would be Robinhood, and that's when Robinhood was $30 a share. So Luke, Hot Stocks, Luke Jacoby. We're gonna get him back on here too sometime.
He is, I think, next week. He's next week on Tuesday.
Luke is coming on next Tuesday. Hot Stocks, Luke Jacoby from Benzinga. Formerly
Tesla is moving.
Yeah.
Tesla is moving higher. Tesla around 480 here. Tesla spiking about $5. We are looking for the U.S. auto sales data. We had been expecting it. I am on the investor relations page here. I do not see yet.
I think they're jumping the gun here a little bit.
Here they are.
But
I got them. Deliveries, Q3 deliveries, 497,000. That's up 7% year over year. The Bloomberg estimate, this looks a little funky, was 440,000. So it looks like about a 50,000 unit beat for Tesla Q3 sales. And what do you know? Triple D said if the numbers come out here and they're strong, the stock's going to go higher. If the numbers come out here and they're kind of weak, the stock's going to dip and it's going to get bought. The former is the case, it seems here. Looks like strong sales data, and we have shares up about $7 or so. I'm not showing my chart. Oh my gosh, let me show my chart here. Not Tesla, my bad.
Ripping higher here. I'll bring it up for you there, Brunster.
Thank you. There we go. Thanks, Triple D.
We hit 479 just now, 475. The numbers are good, man. I don't know how you bet against this. Again, I think, we're going to get inevitable little dips in here, but I think, this is on the road to $500. So we're dipping here a little bit down, 14. We'll see what happens here. I'm still on Tesla.
Triple D, I think let's wrap it up here. We'll kick it over to Stock Trader Network. We're going to go over some more of your overnight trades. We'll take a look at imbalances that have been pretty interesting lately. And we are going to have Shad Markowitz on at 10 a.m. He's got to be one of our STN room members' favorite guests. I'm going to be talking with Shad from about 10 to 10:20 or so. If you haven't done the free trial for pre-market prep users, come over and try out stocktradernetwork.com, PMPSTN for a 10% discount. Give it a shot. Triple D and I are kicking around throughout most of the day. Joel too. Dennis and I host an after-hours show that starts at 3:30. It goes from 3:30 to 5, where I'm basically like the news component, the squawk. I'm trying to get you the news as fast as possible, and Triple D is responding like we just did with Tesla in real time. Trading the headlines and given sentiment about how investors are responding to news items. We have a lot of fun over in that after hour show. It's a good show. Come check us out. We're going to wrap it up here for the day, folks. Thanks for tuning in on this Thursday pre-market prep. We'll be back with you bright and early tomorrow.